Hi everybody, this is MVP again. This is part 2 of a two-part series, and I've been talking and am talking about the performance this year of various currencies. If you was following my last video, you see that we'd finished just talking about the Swissy. I was just moving down to see what else we had here in terms of currencies, and I'm just going to highlight a couple here that I'll share together, and we can talk those through right now. Okay, this brown line here is the Canadian dollar, which you can see it's had a very average year actually. It started off around here. See what I put the line on here? Sort of around here. In fact, it started a bit higher there. It came off first half, and actually has flattened and come off a little bit more second half. So not a great year for the Canadian dollar. People say that there's strong correlations with the Canadian dollar and crude oil. That may be so. I don't tend to get too into that kind of thing. There are people I work with or trade with that try and convince me that this is really, really key, but I don't tend to spend too much focus on it. They say that it's linked in there with the New Zealand dollar and the Aussie dollar. They're also commodity-based dollars, but currencies, but not that fussed on it. To me, the CAD came off. The reason the CAD came off probably in the first half for me personally is that the CAD does tend to trend and follow fairly closely with the US dollar. So the US dollar had a bad first half, mainly because the Dow and equities were rising, and I think the CAD did follow it first half. Second half, I think that it's probably been more, I'm not really sure, more schizophrenic. It's got more interlinked with other forex currencies and other politics as well. Perhaps it was the crude oil second half, I'm not sure. But in the second half, the US dollar did appreciate, but the CAD just hasn't come back. So all in all, the CAD has had a very, very average year. So bad luck if you were trying to buy that this year. It hasn't been happening. Okay, so that was the CAD's fortunes this year. Perhaps next year will be better. Okay, next currency I want to talk about here is the Aussie dollar, which is orange. Can you see the orange on there? There it is. It's in bold anyway. As you can see, this is the start of the year. Nice bold line there coming through. Relatively flat first half, really flat first half. I was probably expecting the Aussie dollar, to be honest, to do much better in the first half. The Aussie dollar is a traditional anti-risk play, as it were. When generally global equity markets are doing well, and especially also commodity markets, you do expect the Aussie dollar to be really kicking some butt. It didn't. It was very flat. Other currencies stepped into its place actually in the first half of the year, and it just didn't do much at all. Very flat. Now that was quite a warning, because it's like anything in life. If you're expecting something to do well, and all the conditions are favourable, and it doesn't, then beware if the conditions turn off, because then it can be well under pressure. It can be basically a sick currency that's not doing too well. And in the second half, when the Dow got hit, as you know, over here, and we saw equities under pressure, especially in Q3. That was when really we did see some nasty hits on the Aussie dollar. And as you can see here, it really did start to be actually quite volatile. Look at that trading range there between about there, top end, you see, never really broke that level. It never broke first half levels, did it at all? Every time it got up to the top really of the first half, came off and bounced around these bands here. So it really traded in a range all year. So an interesting year if you were range trading on the Aussie dollar. It never broke through much. And all in all, it's come out relatively flat this year, but second half there was some more volatility there. And I mean, if you follow my thread or follow other traders, depending on what the Dow were doing and the other currencies, there was some nice trend moves. Look at these lovely trends here. This is at least a month here of activity. A month of falling, a month of rising, a month of falling, a month of that was some great trend ranges, wasn't it? So it's been a nice currency to trade this year, the Aussie dollar. And while we're on the subject, we'll quickly just talk about the New Zealand dollar, which is its bosom buddy just across its small ocean there. Okay, light blue down here. This is the turquoise. This is the New Zealand dollar, and as you can see, we're just bouncing that to the start of the year. As you can see, now actually, the New Zealand dollar had a very poor Q1. Look at that. Again, this can be linked to a variety of things. The New Zealand dollar is obviously much smaller in terms of in terms of currency and size than obviously its bigger Aussie brother, but it's still very susceptible to the same markets as the Aussie dollar. The Aussie dollar obviously very strong in commodity sales, soft commodities, exporting traditionally more to Far East countries and so on. It doesn't do that much work with the more the Western world because of the distances involved. So very, very linked into those kind of economies. The New Zealand dollar is probably less prone to that. It's got less economic kind of linkage to that. They're much more sheep related, various other soft commodities again, as we say. And I think they really had a poor first half. Just no strength there at all. High interest yielding currencies, obviously like the Aussie dollar, but it just wasn't happening in the first half of the year, and that surprised me a little. But look at this: Q1, Q2 came back a little bit, did well, pushed into Q3, and again second half of the year, regardless of what's happening. And again, you would have expected with that complete collapse, Q3 of global equities, you would have expected to see this much weaker, but it was fairly robust. So all in all, and in the second half, as you can see here, it didn't really trend. So there's a nice move up, down. So there was some nice trends here, probably going through a month or so with some of these moves, but nothing really there to speak of. So second half again, relatively flat for New Zealand dollar. Who knows what next year will bring? But the big move, first half Q1 sales, which was a tough one to call. I certainly wouldn't have called that based on the way I look at correlations. I would expect to see that flat or rising. So for the brave that sold it in Q1, you did very well indeed. So congratulations to you. Okay, just 4 left to talk about now. Now I'm going to talk about what I call my famous two. I call them a tag team. They almost battle together against the rest of the currencies. The yellow yen and the green US dollar here, the greenback. They are separated here by a quite significant amount, but don't let that put you off. That's just literally the way that the chart has been constructed. If you look at them, their shape is very similar. You see the falls in the first half and then the climb in the second half. These guys run together. They are like brothers. They're inseparable. Or in terms of my world, I think they're inseparable. And I really call them both. They're both risk-based currencies. They really do move in opposite directions to the way global equities move. And this year was actually no exception. Worked quite well, this trade. So if we put our lines in here, you can see, guess what? With a very strong equity base first half of the year, all the way through to June here, where we know there was significant increase in Dow equities and global equities, good rises through the first half. Both of these currencies took some hits. Obviously, the yen fell significantly, then flattened, and yeah, so did the US dollar. The US dollar, bad first 3-4 months, the same as the yen, and then rallied a little based on the fact that we saw some very, very late falls here in the last 2 months of the first half of the year, and that's what allowed these guys to claw something back. Japanese government very, very, very happy to let that happen, believe me. And if anything, they were trying to chase some of those sales as well. So Japanese government happily to let their currency devalue. Not so happy second half, but we'll talk about that in a minute. US dollar represents 80% of all trade or global forex trade in the world. The biggest cat out there, as it were, fat cat out there. There's nothing that comes near to the US dollar. People might try and replace it or substitute it or offer basket variations, and obviously the Chinese would love to try and do something with that. You just don't mess with it. This is the top dog in the forex currency league, and because of that, it's less difficult to manipulate by the US government, which actually makes it quite attractive to trade, which is again why it's a very nice speculative currency. So first half of the year, no matter what the US dollar currency were going to do, no matter how they tried to argue, go bankrupt, do whatever they were trying to do, no one loses faith in the US dollar, or at least they won't yet in the near future. And with those Dow equities rising, you saw US dollar come off. And as you can see there, if you were selling US dollar first half, you did very well indeed. Selling those two risk currencies and the yen, it was always a great play as long as Dow was the Dow and global equities were rising. So first half. Second half of the year was a different story. We had the collapse, as you know, of some of the global markets in second half of the year, early July, August, when kind of traditional summertime periods when volatility should start to slow a little bit as people go away on holidays. But boy, there was a huge hit. But what this did is it sent these guys coming back. They fought back in the second half and came back up. And as you can see, the dollar really got back to where it opened. And the yen actually did even better. Actually, the yen pretty much was probably the success story of this year. I think it was probably the strongest currency overall of the year in terms of where it started and finished. As you can see, there is a difference here. It's not much, but believe me, compared to most currencies that were flat, this was quite a rise. So the yen really was the buy in the second half of the year, came flying through here. And even though Dow and global equities came back, you can see the strength of the yen was still relatively robust. It really held the ranks. So full marks to the yen and the US dollar. Good year, flat year, and I think that's going to finish up. I think in this last week or so, I think that's going to keep going. And I think those both have had very, very, very good second half. So congratulations to anybody that was buying those. Okay, last two currencies in bold here, the blue euro and the red pound. We'll start with the pound. That came in here. There you go, start of the year. By half year, but he had a good first half. Again, if anything, it was going to be linked off the fact that as a country, we were projecting a very strong image. We were trying to balance our books. We were going through austerity measures, and unlike some companies in Europe or countries in Europe, like the Greeks and so on, we actually were sticking to the rules. We were a tough race. Being British or English myself, and yes, I think all in all, although people complain about it, we understand that austerity measures are required. We've got to try and balance the books. We've got to get back in there and make sure that we're thinking more long term and balancing our books and not being in huge amounts of debt, getting out of this kind of debt, this kind of debt problem we've got. And I think people respected that as currencies. As the down market rose first half. I think that also kept us fairly boisterous, and we had a good first half. As you can see, there was a slight fall as we came in to the end of the year based on that Dow and equity release, but generally the pound had a good first half. Second half has been pretty flat, as you can see. We've came back and running along that entry line, the opening price line of the year. As you can see, we've bounced around that. So all in all, again, a relatively flat year for the pound. If you were investing in a basket of currencies and you had so much in the pound, you certainly wouldn't have lost any money, as you can see. So full on for the year. Who knows what the future brings? The pound obviously is going to be at the mercy of the Eurozone, and whatever the Eurozone is doing, whether we like it or not, we're linked into that. And I just don't know. I know one thing, though. I'm glad that we are a separate currency, because it could bring some windfall benefits to us next year if the Eurozone really, really does collapse, even though obviously it's a major export partner. I'm fairly comfortable about the pound next year. I think we're gonna hold our ground, unless barring all disasters. So that's the pound. And last but not least, probably the most talked about currency in the year. If you were talking about headlines, as they do in marketing, they talk about the amount of headlines and the amount of communications and correspondence that is talked about a currency. That is probably, aside from the US dollar, which obviously should always be the most talked about currency given its size and 80% of the market, the euro. My God, it's been such a year for the euro. What a soap opera! As each country fell, then came back, then we had bailouts, then we had more bailouts, then we had, I don't know. Every day was another saga, and it's still continuing, as everybody knows, with Cameron, the British government, the British Prime Minister, stepping away from some of the talks at the moment and saying that he vetoed some of the decisions they were making. The Eurozone, they've got to make their mind up. I don't think there's enough money that they'll ever find to dig themselves out of a hole. And next year, my prediction is at least one country will have to fall out. There's got to be a fallout. You can't have a family like this with all this infighting going on. It's just not going to work. But ironically, despite all of that, if you can see there, looking at the lines here, and here's the line, I'm just moving it. Ironically, you can see that the euro started the year incredibly strong. It had a really strong first half. No matter what was going on, no matter what the arguments were, the euro was a very, very strong first half play. In fact, when I look at it, alongside probably the Swissy, which was the best play in the first half, the euro had a great first half play. Q2, it did flatten off, but it was great. It followed the equity markets that were doing well. And it did well. It did well. Second half hasn't been so good, and there's been a slow, you almost see like a parabolic fall off. You see the pattern there coming down, almost like a convex or concave kind of loop there falling. And I really, it's going to have to be some kind of minor miracle for this not to continue through into Q1 next year, to be perfectly honest. But obviously, second half, despite the fact that obviously there was a collapse here in Q3, and there's been a recovery in equities in probably the fourth quarter. For these guys, because of the stories and all the terrible things that are going on, they're just digging a big hole at the moment for themselves, a big trench. So we'll see. So that was last and not least, that was the euro, and we'll just see what next year brings for them. But I can assure you, it will be very volatile. Okay, this is MVP signing off. I hope you have a great holiday this year. I'm wishing you a great 2012. You know where I am. Please email me, contact me. Always happy to chat with people. And I just, once again, have a great 2012 trading. This is MVP signing off. All the best. Cheers. Bye-bye.